Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. We've got a bunch to talk about. Earnings coming out. Just came across the wire that SoFi Technologies, ticker symbol SOFI, has filed for 50 million common shares, a stock offering. So that could bring the stock down or provide a little selling pressure on the stock. But that just came across the wire a few seconds ago. XL Fleet reported Q3 earnings. Their revenues were down year over year. That just came across the wire. Lots of things to talk about, and of course, the market today. But the most important thing, what's on your mind? Leave your ticker symbol in question in the comments, and we will go over it live during the show. So let's just jump right into it. Today, stocks cut early session gains to close around a flat line today. The NASDAQ closed about 15,854. And the S&P was little changed, around 4683. And the Dow Jones lost about 12 points to close at 36,088 after adding more than 100 points earlier in the day, as yields got higher and they weighed on tech stocks. On the corporate front, Tesla stocks fell about 2% after Elon Musk and Bernie Sanders shared some tweets. And the U.S. Senator demanded the wealthy pay their fair share on taxes. And Elon basically came out and said, "What? You want me to sell more shares? Just say it, Bernie." So, yeah, that was kind of funny. On the other hand of the corporate side, Boeing shares were up more than 5% after the company received an order from the Emirates for two 777 Freightliners valued at more than $704 million. Meanwhile, traders' focus this week will be on retail sales. They come out tomorrow morning, Tuesday morning at 8:30 a.m. Eastern Time, and industrial production data along with earnings from the retail giants, including Walmart, Home Depot, Lowe's, Target, etc. 7 of the 11 S&P 500 sectors closed higher today, led by the light-weighted utilities. They were up 1.3%, and energy was up 0.8%. The healthcare was down 0.6%, and materials were down 0.5%, and information technology was down 0.1%. Those were the underperforming sectors in negative territory. Okay, first up, look at my screen here. At the very top, we've got Matterport jumping 22% today. They are now at $27.12. They are down 1.29% in after hours, which brings it down to $26.77. We also have Blink charging. They were up 17.1% today, but they're down 2.8% in after hours. So two big movers that we talk about frequently. And then Rivian. Oh my goodness, the company just can't stop. They just cannot find a ceiling, I guess you could say, for their offering. When they IPO'd last week, they're up 14.9% today. So they are doing quite well. All right, first I want to look at Bitcoin real quick, and let's see, what website was that for the sectors? I use a newswire that gives me the information, but a free place where you can find sector performance. If you go here, and let me pull it up real quick here for you, and I'll give you the website name. Let's see, where is it at? Okay. Here we go. There it is. Okay. All right. The website is csimarket.com, and this can give you a treasure trove of information. If you scroll down here and you go to performance, and you go down a little bit further on the performance page, they give you the best performing, and they also give you an option for the worst performing. Now you can look at it 1 day, 1 week, 1 month, 1 quarter, and of course year to date. This is where you can get that information for free without costing you a penny. As you can see on the website, there's a bunch of ads though. If you look past it, you can get the information that you're looking for. And again, that is csimarket.com. And then the exact page is /screening/performance. And that's where you can get the exact information on sector performance. So I hope that answers your question. Nice. Go. Okay, perfect. Good. I'm glad. All right. Actually, why don't I just copy this link right here? I forget that I can do this. If I copy the link, I can go over here and I can do this. And it should show up in the chat. And it's a link directly to this page right here. I totally forget that I can do that sometimes. So there you go. There's the link right there in the comment section. And this is for csimarket.com. You can get free information from there. Okay, jumping back over here to the charts, I want to look at Bitcoin. Now, in yesterday's Catalyst video, you are very welcome, Mason. I appreciate the question, and I appreciate you being here. In yesterday's Catalyst Watch video, which is, I believe, the most important video that I put out each week, it comes out every Sunday evening, I talked about Bitcoin and the strength of Bitcoin due to Bitcoin undergoing its biggest upgrade in 4 years. The upgrade is called Taproot, and it's currently live right now. The update provides more transaction privacy, more efficiency, and opens the potential for smart contracts. And that is very big for Bitcoin to offer smart contracts. If you remember back in September, Cardano underwent a similar upgrade where it accepted, or the upgrade allowed Cardano to accept smart contracts. And right now, Ethereum is your biggest cryptocurrency for smart contract services and for DeFi companies to build their products on. But Bitcoin allowing that to upgrade to now be live, that is a pretty big deal for Bitcoin. Now, it was showing strength yesterday on Sunday, and you can see these two green candles, yesterday's green candle and then Saturday's green candle here. And that was after the update was put through and gone live. And then today, Bitcoin is down about 3%, but it is holding above two critical points. One is its 21-day simple moving average. The second is there is a price line support, and it's right at $63,500. There's good support there. The past 3 days, it hasn't gotten below that point. Even today's candle wick, it's getting close, but it's not quite there yet. It's about $56 away from that support line, but that has been holding very well for the past week. So we'll have to watch and see, does it slip below that line? And if it does, its 21-day moving average is currently sitting right at $63,041. So that'll be also a critical support area. And then just below that, there is a trend line support, and that's sitting right about, let's call it $62,300. So Bitcoin has got these three good support areas that are very close together right now that should help to hold Bitcoin in place so it can then move on for its, I guess, its last bull run of 2021. All right, that's Bitcoin. Now let's take a look at Ethereum. Now I use TradingView for all of my charting. There's a link in the description below for TradingView. They have a free account. Ethereum, it's doing the exact same thing. Ethereum is using its 21-day moving average as support. It is held up for the past week as support for Ethereum. And right now, beyond the 21-day moving average, there is nothing else supporting Ethereum. There's no price support. There's no trend support. There's nothing under that 21-day moving average. So if it breaks below that, the very next level of support is at 42.97. That would be a trend line support for Ethereum. So it's been in this kind of downtrend for the past 5 days or so. And if it does break underneath that 21-day moving average, which right now the odds are against it dipping below the 21-day moving average, because over the past nearly 2 months, Ethereum has been using that 21-day moving average as an area of support. So it's got some history now that we can use to take some analysis away to predict maybe what will happen. But it's got really good support there at its 21-day moving average. Okay, one last thing on the Taproot update for Bitcoin. Back before 4 years ago, when Bitcoin underwent its last update, we ended up with 2 blockchains basically when Bitcoin went through the update. And that's because half of the miners did not want to do the update. The other half did want to do the update. So it was kind of a Bitcoin civil war 4 years ago. And that's how we ended up with Bitcoin and Bitcoin Cash. So if you were ever curious of how Bitcoin Cash came about, it's because 4 years ago, there was a hard fork of Bitcoin. Now today, 90% of miners agree to this update, and it's called Taproot again, and they are planning to activate it and use it. So it's kind of like a soft forking of Bitcoin and not a hard fork where it's going to split off into 2 blockchains. So we've got consensus, and it's 90% of miners that are saying the Taproot update is okay. Now, the activation for this on digital wallets that hold Bitcoin, well, that could still take a couple of years because those wallets have to update basically their app, right, to accept the Bitcoin update. So we've got that. Okay, I mentioned Matterport a minute ago. Let's look at the chart for Matterport. The ticker symbol is MTTR for Matterport. Having a great day. They have broke out to its highest level since completing its SPAC combination on about 3 times the average volume. That's what's happening here with Matterport. And if we want to try and figure out a pattern here, this is the day chart for Matterport. And if we look at this right here, whenever you see a symmetrical triangle on a chart, that is something to pay attention to. Now, this isn't a very well-defined one because the prices have been bouncing around so rapidly. But over the past 3 days, it had been moving up. And whenever you see a symmetrical triangle, you usually have an explosive move to the upside. If we go back a month ago, and we can see this symmetrical triangle right here in the middle where the price was bouncing around, and then the price was getting tighter and barely moving, and then it broke out. It bursted right above that and broke out. The same thing has happened here. If we were to take this closer in on a 4-hour or a 1-hour chart, then this symmetrical triangle would be more defined. And then look at this big volume here at the bottom, this big green volume. This is 3 times normal trading volume for Matterport. So it just took off today, 22%. So if you've been holding this for a while, we talk about it occasionally during the After Hours show. We've been talking about this thing for a while now, and it has just been a good runner. If we take and we measure from the very bottom before the last rally, that was about August 23rd, and we measure to where it is today, that's a 107% gain in about 82 days. So that is remarkable. Doubling your money in 82 days. So it's been on fire. Now, I don't know if it can hold this up for very much longer, but it is definitely catching on, especially because of the talk of the metaverse. Matterport and their 3D capture, right? They take physical spaces and they create a 3D digital replica of that space. That is going to be massive for the metaverse in building that out. Imagine you have this beautiful room that you've crafted, you take a picture of it, you transform it to being digital, and then you can rent that room out. That digital space you can rent out to somebody. That's kind of how Matterport can fit in to the metaverse. All right, another company, this is their second week of being a publicly traded company. That's Rivian, ticker symbol RIVN. Now, again, it's the second week. They continue to see strength. A report today suggested that Rivian is considering the construction of a new vehicle and manufacturing plant in the state of Georgia. What could that new vehicle be? They already have a pickup truck, even though it's a smaller size pickup truck, and they have an SUV. Could they be going after the sedan or a full-size pickup truck? Which one do you think Rivian would be doing next? Let me know in the comments how you feel about it. Do you think they'll go the sedan route and create a Rivian car? Or do you think they'll take their Rivian truck and make it full size? Okay. Another electric vehicle company, Lucid Motors, ticker symbol LCID, they had earnings reported today, and I have not seen any financials reported yet. However, there is some other interesting things that have been reported. Number one, and this was earlier in the day or yesterday evening, but anyways, Motor Trend announced that the Lucid Air has won the 2022 Motor Trend Car of the Year, the first instance in which the initial product from a new automotive brand has been awarded the, quote, golden clappers. Now, this is pretty big news for Lucid. This will help with name recognition, brand recognition, and building brand awareness by being the Car of the Year, 2022 Car of the Year. It's pretty impressive that Lucid was able to accomplish this. Now, with Lucid, they did have earnings are scheduled to today. Now, before I get into what has already come out about their earnings, in the options market. Now, you can learn a lot of information by looking at the options market, but the implied volatility for Lucid Motors, last night when I created the Catalyst Watch video, I said it was at 111. Today, it's at 118. That means the volatility has gone up. Now, today's put call ratio is 45%, meaning that the options market, or in the options market, people are betting Lucid is going to move up today rather than move down. Now, they were up 2.1%, small gain, but the options market was right nonetheless. They were up today, and they're up another 2.5% in after hours. Now, here's what's come out for Lucid, and let me just double check my service here, my Newswire service, for any earnings for Lucid. Just to double check that I have everything right. I have the most updated information. That's the, okay. All right, so there is nothing yet. Okay. All right, so the estimate for Lucid on their earnings is an EPS of a loss of 25 cents on revenue of $1.25 million. That's what the estimates are. Now, the earnings have not come out yet that I can see. However, Lucid has released some customer information about reservations. So customer reservations rose to 13,000 in Q3, reflecting an order book of approximately $1.3 billion and have seen an increase beyond the 17,000 customer vehicles. Now, customer vehicle production started in Q3 at Lucid's Advanced Manufacturing Plant, or what they call AMP1, in their Arizona factory. And the second phase of construction broke ground to add 2.85 million square feet of space. Lucid also noted that it significantly strengthened its balance sheet in Q3 with the closing of the SPAC reverse merger plus the PIPE deal, bringing in approximately $4.4 billion to their balance sheet. Now, the company ended the quarter with a cash position of around $4.8 billion. The outlook, well, Lucid says, quote, "We see significant demand for the award-winning Lucid Air, with accelerating reservations as we ramp production at our factory in Arizona. We remain confident in our ability to achieve 20,000 units in 2022. So they have put a target out there of 20,000 vehicles in 2022. This target is not without risk, given ongoing challenges facing the automotive industry. Now, with the global disruptions to supply chains and logistics, we are taking steps to mitigate these challenges. However, and look forward to the launch of the Grand Touring, and Pure versions of Lucid Air throughout 2022, end quote. So that's what Lucid believes. They see strong demand for their product. They see a healthy balance sheet, and still there are no earnings being reported yet. I find that a bit surprising, unless I just have my time off a little bit. I thought it was supposed to come out at 5 p.m. Eastern. Maybe that could be Mountain Time or Central Time. So I could be off on that a little bit, I guess. But yeah, still, there is no news yet about Lucid's financial statement and their earnings. Just the update on reservations and their thoughts about how they're looking. All right, I'll keep an eye out for that as we continue the live stream for any updates to their financial earnings, because that's what we really want to see. Okay, another company that had a tremendous run but has been getting hurt for a few days now is Upstart. Ticker symbol is UPS. Get my cursor back over here. UPST is Upstart's ticker symbol. Now you can see here they have fallen out of their nice technical structure that they were in. They are well below their 50-day moving average. They are below their trend line support, and they've been falling. There's a little bouncing going around right about the 240, but to maybe down to $230 price range. There is some bouncing around, but it lost 11.5% today. They were up 7.3% on Friday, so they just erased those gains completely. Now, if we try to find out where is Upstart going to stop falling and maybe turn it around, well, we have to go all the way down to somewhere under the $200 mark, maybe $194, $195. There is support there. And then there's really good support at $168 to $170. Now, I don't think it's going to fall that far. But that's where there are two very strong areas of support. So right around the $200 mark, and then all the way down to, say, $170. Those are the two areas that have the strongest support. Right now, because the stock rose so quickly, there isn't much support that you can find on your way down. Now, it does look like it may be trying to come down to $200 area and find support there. So just be cautious with Upstart and this falling that they've been in. Ever since they reported earnings, they had a big gap down. And right now, that kind of trend line support that they used to have has turned into a trend line resistance area that they cannot break back above. So just be careful when trading Upstart. As far as investing in Upstart, this pullback, I think, is wonderful, quite frankly, because this is a company that's changing an industry. It's changing how loans are being lent. The process that people have to go through to get loans, Upstart is changing that using artificial intelligence to help pick out the good candidates to loan out money to. And Upstart, their business model, they don't have a lot of risk because they're not putting out the loans themselves. They're like a third party mediary, right? They facilitate the loan, but they don't hold the loan. Their bank partners hold the loan. So that's why I love their business model, because they don't have the risk of the loan. Okay, moving on from the volatility in Upstart, we're going to look at another company that's had a lot of volatility since their Q3 earnings, and that's Disney. Ticker symbol is DIS, and that's the Walt Disney Company. They have just fallen since earnings. But me personally, I do hold Disney. I do hold Upstart. A lot of the companies we've talked about today that I do hold. But Disney is one that I think it has a future. It's not firing on all of its cylinders right now. It's not 100% efficient. It's got a lot of holes. And those holes are why you see a giant gap down here on earnings. And it's trading now at a I believe, a low. What is that? Is that, yeah, this is the lowest they have been since January 27th. Now, on January 27th of this year, there was like a mini like flash crash kind of for Disney. It fell 3.8%, but the very next day it had regained all of that, and it was in a rally at that point. And then before January 27th, we would have to go back to last year to find a price this low for Disney. So it's an incredible discount right now. And they have fallen for 4 straight sessions now. There should be a turnaround soon, okay? All right, moving on from Disney to another company, one that's a little more popular, Oatly Group. And this is one, the ticker symbol is OTLY. Now, Oatly Group, this is one that I had in yesterday's Catalyst Watch video, and I said stay away from Oatly, and that has paid off because Oatly is down over 20% today on bad earnings, very bad earnings. Now, hopefully you were able to watch the Catalyst video yesterday and stay away or get out of Oatly. But I just don't think there's a big enough market here to support Oatly and what they're going through. They make milk from, different alternative milk, I guess I could say. And I just don't think there's a huge market. Yes, there is a market, but I don't think it's a huge market that's going to drive the valuations and the stock price too terribly high for this company. Let's see here. FUN had just had earnings. Is it as bad as it looks? I think there may be good news for the story for the company during tomorrow's earnings call. All right, let me plug that in here. FUV Arcimoto. All right. Arcimoto, they were kind of flat today. They were down much lower this morning, and they have come back up. Let me go in a little deeper here. I'm going to go to a 1-hour chart for Arcimoto. Now, on the 1-day chart, they are just above their 50-day moving average. Here on the 1-hour chart, we can see a little different story with them trading underneath their 21-day moving average, which is showing weakness on the day specifically, dipping mostly after hours. Yeah. Yep. Because it's down 5.27% in after hours right now. All right, let me look up for any specific news here that I can find. All right, it's loading. All right, so they have, let's see here. All right. All right, it's loading. I'm going to look in 2 different places here for it. All right, Arcimoto now has a warning on it. Remember when I got that warning for Smile Direct Club? I am now getting that same warning for Arcimoto. That is new. The last time I was here, that warning was not present. All right, let's look here at their earnings. The page is loading. All right, so they missed by 11 cents. Their Q3 EPS was a loss of 31 cents. Their revenue was 1.5 million, which was a 120% year-over-year gain, but that missed by 380,000 for Arcimoto. Yeah, I've got Splunk coming up. I've dug a little deeper on Splunk and what is going on with Splunk right now, because they've got some executive moving around, I think, if I remember. All right, Arcimoto, I'm not seeing anything specific other than just that miss on earnings, and then of course that warning on the wire to stay away. Let's see here. So Arcimoto is now accepting vehicle reservations in Nevada, the 5th state in Arcimoto's nationwide execution plan. That was earlier in November. All right, I'm not seeing anything specific about Arcimoto right now other than the earnings report. All right, I'll keep an eye out for Arcimoto, but yeah, okay. All right, 2 earnings that I want to talk about real quick that I mentioned in yesterday's Catalyst video. Advanced Auto, and that ticker symbol is AAP. Get the cursor back on the right screen, AAP, and I'm getting the Splunk. That's coming right up. I said they would do good. They're up 1.2% during the day. I did say they were stretched out, though, because they were at the top of their trading range that you can see right here, the purple line at the top. And they're down 3.5% in after hours. They beat by 36 cents. They beat on revenue. Their comps were up 3.1%. They guided fiscal year 21 revenues above consensus. They raised their fiscal 21 comp guidance to 9.5 to 10% from a prior guidance of 6 to 8%. So that's a pretty big jump. Reports for Q3 21 earnings were 3.21 on revenues of 2.85 billion. Revenues rose 3.1% year over year. The company issued upside guidance for fiscal year 21. I did mention that already. They're guiding their fiscal year 21 revenues to 10.9 to 10.95 billion versus the estimated 10.84 billion. So that's up as well. So that's looking really good. They're also providing guidance of comps of 9.5 to 10%. I already mentioned that, so I don't need to repeat on that. Okay, Canoe is another one that reported. Just real quick on them. Ticker symbol is GO EV. We talked about them in the Catalyst video last night. GO EV was down 1.6% during the day. They're up 2.9% in after hours. This is looking at the 1 hour chart. Let me take it back to the daily. Now, Canoe reported Q3 net loss of 35 cents, cash and cash equivalents of $414.9 million. The outlook, they see Q4 operating expenses at 95 to 115 million and capital expenditures of 60 million to 80 million. Now, I've got on the chart here, you can see EVGO. All right, now I've got an emerging stock that I want to talk about just right quick, and then we'll get to Splunk. This is one that I think everybody should be looking at and doing your own analysis on, but it's Omega or Alpha and Omega Semi. The ticker symbol is AOSL. Now, Alpha and Omega Semi is a new addition to my growth rankings this week. I'm bullish on this chip space. You know, you've got NVIDIA, who has run up tremendously far, and other companies that are producing chips. Now, they're down 2.8% during the day today. This is providing a nice pullback. I need this stock to come back down a little bit, at least to its 21-day moving average, to catch up to it before going in with a full position. Now, Alpha and Omega is a supplier of a broad range of power semiconductors. It focuses on high volume applications, including portable computers, flat panel TVs, LED lighting, smartphones, etc. Alpha and Omega said it could see itself generating an annual EPS in the target range of $4 to $5, which equals a very low PE ratio of about 10 at the midpoint. AOSL has become a valued supplier to multiple Tier 1 customers. It sells to the #1 global smartphone maker, #1 gaming console maker, #1 global home appliance manufacturer, and #1 power tool provider. In its September quarter, in several end markets, demand for its products was greater than the company could fulfill. To manage this component shortage, Alpha and Omega shifted production to meet customer needs while driving growth in both revenue and gross margin. As a result, Alpha and Omega is expected to expand capacity and is enhancing the technology sophistication of its Oregon fab, which should allow Alpha and Omega to generate $70 million more than it currently does. The new capacity should come online in the December quarter of 2022. On the chart, Alpha and Omega has had a nice run, but the recent pullback to its 50-day moving average would be a good buy, I think, in my opinion. So it needs to come back down a little bit, but this is a company worth looking into, at least in my opinion. Okay, now let's move on here. Let me take a quick little 5-second break, all right? And then we will get into it. And we're going to get into Splunk next. All right, excuse me for that. Got to wet the whistle every once in a while. All right, Splunk, SPLK. Let's look at this chart together. Down big, 18%. Now, this is the daily chart, right? So this is showing 1 day. If I back this thing up, this hasn't happened before to Splunk. Back here in November of 2020, Splunk dropped and gapped down hard, just like it did today. So this isn't new for Splunk, but it is a surprise. Now, Splunk is making a big splash today, but not for the right reasons, okay? After announcing that the CEO is unexpectedly stepping down as Splunk maneuvers through a major business transition, the stock has plunged lower in a sign of lost confidence in the company. Not even the company's upside Q3 revenue guidance, which was also provided in today's press release, could curb the selling pressure as investors, well, they contemplated whether the surprise resignation equates to a further delay in Splunk's turnaround. Because remember, this company is trying to turn it around and change their business model. Followers of Splunk are likely aware that the company is executing a shift from traditional software to a cloud-based software provider. This ongoing transition has resulted in erratic and uneven financial results. I guess I could put it that way, as reflected in the stock's 20% year-to-date loss, which may be, let's look at this real quick together. Yep, 20% loss year to date. Technically 19.14%. For the year, the past 365 days, it's down 29%. Now, the most glaring issue is that Splunk has posted net losses in 5 of the past 6 quarters after the company had become consistently profitable. Substantial investments in IT infrastructure are mainly to blame as Splunk builds out its cloud hosting capabilities. But the splurge in spending has yet to fully pay off. So that's what's happening with Splunk right now. Let me double check for any updated information that might have come across the wire during the live stream here. Also, let's take a look at these comments while this is loading. Splunk, yep, I do, but they're so cool. Was the warning hours after? Okay. All right. Strange that Splunk drops this much just based on a CEO change. Yeah. Companies, when the executive branch of a company is changing, usually that shows signs that the company is not healthy, that there's something wrong at the company. And sometimes it is a big surprise and we know nothing about it until at the very last moment, much like today's. Okay, so let's see, anything else here for Splunk? And the CEO, if I didn't mention, it's effective immediately that the CEO is stepping down. Graham Smith who is chair of the company's board, has been appointed interim CEO, and that's also effective immediately. Also announced certain preliminary Q3 results, including cloud ARR growth of approximately 75% year over year, total ARR growth of approximately 37% year over year, and total revenue growth of approximately 19% year over year. And that's the latest for Splunk. And there's nothing else new right now for Splunk. Their earnings aren't until December 1st. So basically, it could have been a marketing executive. It could have been the CEO themselves. But the reason why they put out some of this quarterly results on growth, which try to have a little bit of damage control for the news about the CEO stepping down. But I don't see anything yet that says why the CEO stepped down. Right now, it's just a right now it's just speculation. Let's see. Good support and resistance levels for Splunk. All right. I just reloaded here to look for. Okay. Now, there's nothing else on here about Splunk and why the CEO left. But there is a note. Splunk pre-announced solid results ahead of estimates on revenue, ARR, cloud ARR, and operating margin. Splunk also announced CEO transition. And with this, it's making the Splunk sell-off is a no-brainer buy opportunity, too cheap to ignore. So let's look here at the chart. So right now, there is support for Splunk. If we go back here to the beginning of October, where these candles drop down, that's an area of support, and that's about where Splunk's at right now. And before that, we would have to go back to just over my head here in the frame, right about here in this area. There is support also at that range. So I'm going to draw a line right there. It's at about $173.50. Now, that might be a little bit too precise there. And that seems to be right where Splunk is sitting at. Now, the reason that we can call that an area of support is, again, right here, you can see that Splunk was able to bounce off of that price level. And then also back here, it did the same thing. And right here, before it broke below it, it did bounce on that area. And then, of course, right here, when it broke above, when it gapped up, it back tested right at this level. So we have 1, 2, 3, 4 different areas of support at that price point, and that's $137. Now, if we look where Splunk's at right now, it is sitting right on that line with the candle wick actually dipping a little bit below that. So the candle wick dipped all the way down to what, $135 today. So I think this is a solid area of support for Splunk right now. Now, looking at resistance, the stock has gone up to $207 before, but that was during the height of speculation back here and this would be September of 2020 when it reached that all-time high that we haven't seen again. Now, a technical structure for Splunk could look like this. All right, so let's put a couple trend lines on here. Now, when we're drawing trend lines, we want to start at, if we're going down, we want to start at one of the highest points. And then when we're going down, we want to be able to match up as many points as we can. We want contact points. So if a candle breaks above it or doesn't quite reach it, that's okay. We want as many contact points as possible. Once we have that, now we have our trend line. And then we can copy or clone that line. And then we go to the opposite side of where it's falling. And again, we want as many contact points as possible. So it looks like right about there. Now, of course, it has dipped below it here on earnings. It dipped below it here again on earnings. But that would be the downtrend channel that it was in. And then that reversed the beginning of June. And then it started an uptrend. Now, this is how we build out our chart. All right, so we can put it right there for the reversal. And then let's just put this up top. And again, we want as many contact points as possible. And it's okay if you have a candle wick that breaks above it every once in a while. We want as many contact points as possible. So you can see a clear reversal right there in trend for Splunk. Now, I'm going to open this up a bit. And I'm going to take this bottom right here, and we're going to go up like this. Okay. So before the news came out today, Splunk was forming a wedge, an accelerating or ascending wedge. And that's why the 2 points on the line are starting to meet up here on the top right. That was bullish for the company there to continue moving up into this gap and into this hole and then breaking out above it. So I think that this fall, where it's at right now, it could provide a really good buying opportunity. In the after hours, it's up 0.07%. So just a few 10 cents, it looks like it's up. So this may be the support that you need to pile in to Splunk, because the numbers that they did release along with the announcement were good. They showed the company was had growth. They were in the transition, and they were doing good. Let's see here. All right, so technically on the chart here, there you can see where the support is for it, and it looks very strong as support. What do you guys think? You think 137 looks good for support too? Okay. All right. So anything else on Splunk? Yeah, it looks good to me. That looks really good. Okay. If nothing on Splunk, what other companies would you like to look at? Just leave me a ticker symbol and a and we will look into it. Let me pull up the news here one more time. Let's double check for Splunk. Yeah, still nothing new from them. So I think that's about all the information we're going to get for today on Splunk and what's happening with them. Let's see here. Target, sure. Let's look at Target. I talked about Target in the Catalyst Watch video yesterday. I think Target has got more strength than Walmart does for moving up. So Target was up 1.6% today, and it was up 0.5% or so in after hours. It broke above this one area that is one day it could be support, the next day it can be resistance in the middle of this beautiful channel that it's been moving in. So here's what could happen for Target. I think the numbers are going to come out for Target tomorrow. I think they're going to be good. I think the retail numbers are going to be good. The estimate is a 1.1% gain month over month for October. And remember, we had Halloween in October, so that should have helped to boost revenues for retailers, right? In September, we don't have holidays like Halloween or Thanksgiving or Christmas, so that's why I think this October's numbers should be pretty darn good. And if you look here at this chart, Target, starting right over here, atop of my head, is where this this channel formed. It's where they started to accelerate and ascend, and they went all the way up. There's a one area back here right before earnings where it dipped down a little bit and moved sideways, and that's where it got into this lower channel. And then it got back into the top channel, rode that up, and then starting in September, we had that pullback in retail because there weren't a lot of buyers in the summer, and it dipped right here underneath it, almost to its 200-day moving average. Now that it's pulled back up and it's flirting with this center, this midline in its trading channel, I think it's going to come back here above to the top of its trading channel, and I think it's going to go and shoot for. It made a new all-time high today. I think it could continue to do that, at least for the next few days. So yeah, I think it has got some room right here for it to move up. And if we measure where it's at right now and where the top of that is, there's another 7 to 8% of room in here for the stock to fill in. Now, I don't think it's going to have any big 7 or 8% moves, but it's got that much room to move over, maybe the next month or so. Let's see what this performance has been over the past month. And it's up 7.5% over the past month. It's up 49.7% year to date. So it definitely has room to go up, and I think it'll do better than Walmart. So that's Target. Yes, I think there is room left to go for Target tomorrow. And as far as Target goes for their earnings, the EPS is estimated at $2.82, and revenue is $24.6 billion. Okay. All right. Any other companies that you want to look at on the chart or talk about? Tomorrow is a big day for retail. The new retail report comes out tomorrow, 8:30 a.m. Eastern time. So we'll be talking a lot about retail in tomorrow's after hours show. But that wrapped up the companies that I did want to talk about today. There wasn't very many. We did have that new company to look at. Give me your thoughts on it if you do decide to look at it any further. Okay. All right, so I'll just look here at some of the winners today, maybe some of the losers. If you guys have any questions, just put them into the comment section and we'll go over them. Dollar Tree made a big turnaround today. They were up 14%. There was news about what Dollar Tree was doing. I think Dollar Tree was making some kind of a move or some announcement I thought I saw. All right, it's loading. Dollar Tree gained on a report indicating that activist investor Mantle Ridge LP has taken a $1.8 billion stake in the company and plan to push the company to take actions to boost its stock price. Mantle Ridge confirmed its active holding rises to new highs. Yeah, I thought there was a note on them. Okay, so that's what Dollar Tree was up so much today. Let's see here. Faraday Futures, they were up 7.1% there. And I just saw a note come across about Faraday. Let's see, where was that? Faraday. Okay, Faraday Futures, Intelligent Electric provides business update. Looks good at support at 137. Yeah, I agree with that. Absolutely. Splunk at 137. Faraday Future Intelligent Electric filed a Form 12B25 notifying the SEC that it is unable to file its Form 10Q for the fiscal quarter ended September 30th, 2021 within the prescribed time period and does not expect to file it by the extended filing date pursuant to Rule 12B25. The company is also unable to file its amended registration statement at this time. Oh, wonder why. The company's board formed a special committee of independent directors to review allegations of inaccurate disclosures. This sounds like negative news, but it was up today, 7%. The board, as part of its review, is seeking to ensure that the company is adhering to the higher standard of conduct. Interesting. Okay. Is this another company here? A ticker symbol there? Or is that a code? ANMD? Wow, look at that on this chart. Wow, I mean, that is just like an arc. Beautiful. What they have here? A 2-for-1 split. So this is a health technology company. Just went through a 2-for-1 split. Just had earnings here. Reported EPS of 55 cents. They beat by 10%. Reported revenue of 94 million. They beat by 5.3 million. Let's plop a vertical there. What? No, that's not what I wanted. There we go. Yeah, nice run up there with the earnings. And then a pullback. Man, this company has been running nicely. what is it? It's beat the past 4 earnings, and they've been growing steadily. Revenue has been over the past 3 quarters growing. They really took a boost in their profit margin from Q1 21 to Q2 21. It went from got up to 46% profit margin. Q3 21, a 47% profit margin on revenue of 94 million. The past year, it's up 342%. Year to date, 298% or 289%. Technical is rated as a buy right now. A pullback, yeah, that would be great. It looks like it's been using its 50-day moving average as support up until October 12th, and then it really kicked into gear. So right now that it's flirting with its 21-day moving average, I think the best buy opportunity for this would be if it could pull back to meet its 50-day moving average. So if it can continued up to move in time, if it consolidated or went down about 4.5% over 2 weeks, it would meet back up with that 50-day moving average. That's the buying opportunity, I think, because it's been running so nice on the chart. If we go in and look at the 1 hour here, I mean, you can probably see without me drawing too many lines on here, these symmetrical triangles that it just constantly breaks out of. So there's the top of a symmetrical triangle, and then you can go from here to here for the bottom of it, or you can even go shorter to here. Symmetrical triangle, and then breakout, and then it forms another symmetrical triangle and breaks out. And right now it's forming one again. All right, let me just put this line right here. Gotta come in a little closer to see it. Remember, you want to get as many contact points as possible. Let's put the bottom line on there. So this thing is getting ready to break out again. You can see that it's done it 1, 2 times now in a row, and I'm sure if I squeeze it up, we can find more. But it's getting ready to break out again on the chart. This is ticker symbol INMD. It could come down a little bit more. It could come all the way down to $90 for the support line here, or it could just take and break out of this. So this is one to watch. It is getting really close. Okay, Peloton. Sure, we can look at Peloton. Peloton's had some bad news here recently, which has been really good for gyms. All right, so the Peloton, let me pull up the news wire here for Peloton. Okay, Peloton doesn't have earnings till February. They just had their earnings, and they did horrible. Horrible. The only thing that I could say positive about Peloton, actually, I'm not even sure there is anything positive to say. It's not going to perform well anymore. I just don't think so. Not for a while. If we come in here, you can go to Google Trends. If you watch any of Meet Kevin's videos, he always shows you snippets of what's inside Google Trends. But you can search for anything, and it's going to show you the search history for what people are searching. You can do it for a certain country, for the entire globe. But in the United States, over the past 12 months, this is what Peloton has looked like. And this is the ticker symbol, not the company itself. But there was a big spike in May of 21. And if we go back to the charts and look at May, that's when this big dip, see this big dip right here around earnings? There was a lot of searches for Peloton, the stock. And right now, we've got this big dip because of earnings. And we've got a spike in people searching for the stock. Now, we have gone down since the peak, but we just came out of the peak, and also we just came out of the bottom there, right? Okay, so now if we compare it to the company, and if we just do searches here for Peloton, the company, and look at that. Isn't that something? All right, so you can see the on the chart here, red line is people who are searching for Peloton, the company. The blue line is people who are searching for the ticker symbol for Peloton. And you can see there, both are coming down from peaks. So there's not as much searching going on for it. So I don't think Peloton is, it's not going to see these highs that it saw during the summertime, during the spring. I don't know when they could. Let's see here. There's been a bunch of institutions closing their positions in Peloton. Third Point, they just disclosed today in an 13F filing that they sold out of their Peloton position. They closed their position. Tiger Global in an 13F filing also closed their Peloton position. Let's see, back on November the 9th, so that would be just about a week ago, Peloton announced the Peloton Guide connected fitness device, and that's coming in 2022. So right now, Peloton has got to Peloton's got to rethink their business plan. Because with people going back to gyms, that's not good for Peloton. So I know it's doom and gloom for Peloton right now, but that's just where the company is at right now. All right. Any other companies that you'd like to talk about, like me to look at? I'd be happy to. All right. So I'll pop back over here and see what else moved today. AMC Entertainment Holdings, they were up 6.7. Boeing had a nice move today with that sale of the 777. Bumble, they were up 5.2. Isn't that the Bumble. That's the dating site, right? Yeah. BioNTech was up 5.1. Trade Desk again 5.1. They just keep moving since that report last week. It was beautiful. Okay, let me look at some of the losers. Who lost today? Woo, Marathon Digital, 27%. And there's Oatly. We talked about them. Hope you caught the warning to stay out of them. They were down 20%. Yeah, Disney. Yeah, we talked about Disney a little bit earlier. Disney is down, but Disney's not out of the fight. I personally think these dips in Disney are a buy the dip opportunity. Let me go back to a one-day chart here on Disney. Disney just came off of their Disney Plus Day last Friday, and they released a whole bunch of content on Disney Plus. And I think the Disney Plus service is something that is keeping Disney alive right now. They did come in a little softer on user growth, but we here on the channel, we expected that. We talked about it for several days leading up to earnings. Now, if we look here, if we're looking for support, like how much further could this really fall? Well, there's not much support where it's at right now because we have this big gaping hole where it gapped up. And then we have this one down day right here where it came down and touched $160 and then bounced and rallied to its all-time high. So there's not a lot of support right here. If we go looking for support, we need to go all the way down to about $130 before we can find any real support. However, I don't think Disney's going that far. I think it could go a little bit lower, maybe 150. But it's going to be finding support here really quick. Now, just think the next quarter for Disney Plus is what's going to be the driver because we're getting into the winter time now. So the next quarter, we're getting cooler days, colder days. I know it's really cold here in Northern Virginia today. I'm sure not as cold as some of the more northern states that you may be in, or countries for that matter. But Disney, it's going to find support here, and then it's going to consolidate. And then we're going to get through another quarter. And then next year, that should be the year where Disney can actually, instead of lose money or come in flat, when the parks open up in the springtime and they can get more capacity, that's when I think Disney will then, but that won't show up until Q2 of 2022 for Disney. So the next couple of quarters, they're not going to be too good for Disney. And I don't think it's going to do anything for the stock to go up, but I do think it's going to find a floor here shortly. Maybe 150, maybe 145 ish. But I do think it could have a little more downside, but I personally believe it's a buy the dip opportunity for a long-term hold because I believe in the company. It's a big company, and it's kind of going through a digital shift right now, right? It's got big plans for the metaverse, and we hear a lot of talk about the metaverse. So there's a lot of big things that Disney can do to help grow. Now, since it just reported earnings, it doesn't report them again until February. And they're looking at about a $21 billion revenue estimate. And let's see here. Third Point maintained their position in Disney today. Let's see. Corvex maintained their position in Disney today. Top 5. Let's see. They maintained Disney today. Let's see. Yeah, see, shares have fallen for 4 straight sessions in Disney. I mentioned that earlier in the stream. So it's got to be finding a bottom here. Let's see here. Who else? Okay. Yeah, there's not really much other news about Disney right now. It's kind of it's going to find its footing soon. It's going to find its low, and then it'll probably consolidate, and it won't be until Q2 of 2022 before it starts really going again. That would be my prediction. All right, cool. Any other stocks you guys want to look at? Excuse me. Otherwise, I'm going to wrap the stream up. Just double check for any other big headline news. Okay. All right. Well, that looks like everything. That's the companies I want to talk about today. And oh, there goes the bell. I keep remembering or forgetting to turn that thing off. But that's a good reminder for me to say it's time to cut the live stream for the night. All right, everyone. Thank you so very much for joining me. If you haven't already, please consider supporting the research that I do, the analysis that I provide, and the technical breakdowns by becoming a Patreon member. It's the first link in the description. This quarter, I will be adding trade setups and buy-sell signals for Patreon members. I would greatly appreciate that. But most importantly, thank you so much for joining me, being here. I love the conversations. I love going through the different companies with you. So we're all learning. So we're all becoming better investors. You are very welcome. You take care as well. And I will see you tomorrow at 5 p.m. Eastern for another after hours show. So thank you guys so much for being here, and I'll see you in the next video.